And that's it for Markets Live today. Thanks for reading and for your comments. See you all again tomorrow morning from 9 a.m. Shares retreated further towards their recently achieved milestone of 6,000 points as two of the major banks traded without the rights to their recently declared dividends. The benchmark S&P/ASX 200 index suffered a mild loss of 8 points, while the broader All Ordinaries index fell 7 points to 60.97. The mood in overseas markets was gloomy going into Monday's ASX Open after US, European and British shares capped a poor week with further losses on Friday night. In any case, the local share market was always going to struggle with two of the ASX heavyweights, Westpac and ANZ, trading ex-dividend, which pushed the stocks lower by 2.4% and 2.7%, respectively. Gains in fellow Big Four banks CBA and NAB, in the order of 0.8% and 0.4%, help offset those losses. The Aussie dollar was largely unchanged through Monday, trading at US 76.6 cents. Currency traders seem to largely shrug off upbeat comments from the Reserve Bank of Australia Deputy Governor Guy Debelle, as well as weekend news that John Alexander had become the second government member in the lower house to resign. The escalating citizenship MP eligibility fiasco looks an increasing threat to political stability, JP Morgan strategist Jason Steed said in a note to clients. Should the government be unseated by a forced election, the probability of a royal commission would increase sharply, an outcome that would exert considerable negative pressure on the banks. In corporate news, Orezone shares ended the day flat after the coal hauling and rail company revealed plans to acquire Queensland's Wiggins Island export terminal. Mining was the best performing corner of the ASX on Monday. BHP added 0.8% and Rio Tinto 1.1%, while Fortescue lost 0.2% and South32 was unchanged. Graphite hopeful Syrah Resources the session's best among the top 200 names as it jumped 10% following a presentation at an investment conference in Sydney. Syrah is the most shorted stock on the ASX, according to ASIC data. McGrath Real Estate shareholders received a boost on Monday on speculation that former CEO, founder and major shareholder John McGrath was planning with other major holders to take the company private. McGrath added 3.9% to 54 cents, still well shy of its listing price of $2.10. Investors pushed IS down 5% after the financial services software firm released a trading update that pointed to a weaker earnings outlook. Nine Entertainment shares, on the other hand, were boosted by 1% after the TV network signaled a better-than-expected start to the financial year. Call it the iron ore wars. Two of Asia's financial heavyweights are about to go head-to-head as Hong Kong exchanges and clearing starts futures for a commodity that's seen extraordinary volatility and been a popular way to bet on China, challenging Singapore Exchange's leading position. KEX will start trading the futures on Monday, pitting the new dollar-denominated contract against those offered by SGX, which introduced its first swap contracts in 2009 and has become the world's largest clearer of the derivatives. To add firepower to the opening salvo, KEX has promised newcomers all trading fees for the new product will be waived for 6 months.